Alright, let's talk about Polygon, or as many of you know it, MATIC. Now, if you've been in the crypto space for any length of time, you've likely heard of Ethereum. It's the king of smart contracts, the foundation for thousands of dApps. However, Ethereum has had its growing pains. Think of it like a popular highway that gets completely clogged during rush hour. The traffic slows to a crawl, and the tolls or gas fees become incredibly expensive. This is where Polygon enters the picture. It doesn't aim to replace Ethereum but rather to help it. Polygon is a Layer 2 scaling solution, designed to make Ethereum transactions faster and much cheaper. So how does it actually work? Polygon acts as a parallel chain running alongside the main Ethereum blockchain. It processes transactions on its own high-speed network, bundles them, and sends them back to the Ethereum mainnet for final settlement. This reduces congestion on Ethereum itself. For users and developers, this is a game changer. It means they can interact with their favorite dApps, gaming DeFi NFTs without having to worry about those eye-watering gas fees or frustratingly slow transaction times. It gives developers the best of both worlds, the security of Ethereum and the speed and low cost of a sidechain. The native token of the Polygon network is MATIC. This token has a few key roles. First, it's used to pay for transaction fees on the Polygon network. These fees are tiny compared to Ethereum's, but they keep the network running smoothly. Second, MATIC is used for staking. Holders can lock up their MATIC tokens to help secure the network, and in return, they earn rewards. That creates a strong incentive to hold and participate in the network's security, which is vital for a project that wants to be taken seriously, long-term. Ultimately, Polygon gained traction because it solves a real problem. It makes DeFi and dApps accessible to a much wider audience. High Ethereum fees used to price out the average user, making it a playground for whales. Polygon has helped level the playing field, fostering a more inclusive and expansive ecosystem. That's why many projects choose to build on Polygon or migrate over to it, creating a vibrant, ever-growing network that attracts developers and users alike. Now let's rewind the clock a bit and look at how MATIC has been performing over the last few months. The crypto market is never a straight line up, and MATIC's chart has certainly been no exception. As we entered the second half of 2025, the token was grappling with the broader market sentiment. It found itself trading within a fairly defined range, bouncing between key support and resistance levels. This period of consolidation is quite common after a significant market move. It's like the market is taking a breath, trying to decide which direction to head in next. For MATIC, this meant a period of sideways price action, testing the patience of many holders. During the summer months, specifically around July and August, we saw MATIC attempt a few breakouts. These were often spurred on by positive news within the Polygon ecosystem, or a brief surge in Bitcoin's price, which tends to lift the entire market. However, these rallies often met with strong resistance. The price would push upwards, only to be pushed back down as traders took profits. This created a pattern of lower highs, which is often a slightly bearish signal, suggesting that the buying pressure wasn't quite strong enough to sustain a new uptrend. The key support level held firm on several occasions, indicating that there were still plenty of buyers willing to step in at that price. Now for the part you've all been waiting for, my take on what could happen in the fourth quarter of 2025. Based on the current technical setup and the fundamental factors at play, I believe there is a strong potential for a significant rally in MATIC's price. The extended period of consolidation we witnessed over the summer has built up a lot of energy. Think of it like a coiled spring. The longer the price moves sideways within a tightening range, the more explosive the eventual breakout is likely to be. The key will be breaking and holding above the major resistance level that has capped all previous rally attempts this year. A major catalyst for this potential upward move would be further concrete progress on the Polygon 2.0 roadmap. The market has heard the vision, but now it will be looking for execution. A breakdown below the critical support level that is held throughout the summer would invalidate this bullish outlook. Such a move could be triggered by negative macroeconomic news, a harsh regulatory crackdown, or a significant delay or issue with the Polygon 2.0 rollout. If Bitcoin were to enter a bearish downturn, it would be extremely difficult for MATIC to swim against the tide. Therefore, while I am optimistic about the potential for a Q4 rally, it is conditional on these key factors playing out favorably. The stage is set, but the actors still need to deliver their lines perfectly. So, to wrap this all up, what's the bottom line for Polygon in Q4 2025? In my opinion, the project is at a pivotal juncture, and the coming months could be defining. After a long period of price consolidation, the technical charts are primed for a significant move. The pressure has been building, and it feels like we are approaching a point of resolution. While nothing is ever guaranteed in crypto, the confluence of fundamental strength and a potential technical breakout makes me lean bullish on MATIC's prospects.